afternoon, everyone, and welcome to Stock Market Today. Ali Corman, Ed Carson here with a breakdown of the action in today's session. And the market did not like that inflation report, Ed.
No, it didn't. And then they didn't like what they thought about what the Fed might think about that
Yeah.
inflation report. There was one stock that was looking pretty good, Datadog, rebounding on earnings today. And then a couple of stocks were flirting with buy signals, at least initially, Blackstone and Nutrien.
All right, well, let's share some IBD analysis and kick off with a look at the NASDAQ composite, finishing the day down 2.1%. We had the S&P 500 down 1.8%, the Dow down 1.5%, and the Russell 2000 down just shy of 2%. So pretty gnarly looking day. Looks like we closed off lows, but perhaps underneath that 21-day line again, which was an area that we would have liked to see the NASDAQ find some support.
Yeah, I mean, it's sort of like, it would have been nice to hold there. It is in that range still from last week's high to last week's low. I mean, technically, we did very briefly poke above it this morning, but we're essentially in that range. So we're still in the middle of that. I mean, this isn't a shock.
Right.
We're right in this range. The CPI report was coming out. It's one of those catalysts for big gains or big losses, and it did not work out so well. So, I mean, we'll have to see how it goes, but this is why you didn't want to get too exposed with the market in the technical position, and especially heading into that report.
Yeah, exactly. We talked about the potential for this rally not being a straightforward one after getting a follow-through day. We could have a choppy environment, we said. We could have some failed follow-through days. So right now, looks like we are kind of range-bound here a little bit, but there are still some standouts here and there showing some good action. So we'll definitely be taking a look at some of those. But first, let's take a look at the intraday chart here. I mean, what volatility we are seeing in the market right now, Ed.
Yeah, and this is why you have to be careful, because we rallied right at the start. I mean, right at the start, and the NASDAQ actually hit, was positive. The Russell was positive for much of the day. And then around, you can sort of see it really fell off a cliff when St. Louis Fed President Bullard said he is now dramatically more hawkish as a result of the CPI report, saying we're going to get once a 50 basis point hike, which he didn't want like 2 weeks ago. I mean, the 10-year yield is up a lot. We'll look at that, but it's like, boy, it was there was a lot of things going on in the bond market, and that just the market selling off. So we just obviously. Sometimes that initial reaction isn't the way it's going to go, and sometimes the second reaction isn't what's going to happen. It takes a while.
Okay, and now let's also take a look at the S&P 500. In yesterday's session, we were talking about how the S&P was getting close to that round number of 4,600 once again, in addition to its February 2nd high and also the 50-day line, but turning lower here again today. But a similar situation, aside from the fact that it's already above its 200-day line. The NASDAQ is not, but is still holding in this range that we've been in over the last couple of weeks.
Yeah, and so we're just going to have to see, while we're in this range, you don't want to be probably taking much action, especially in anything with growth. Let's just be like very clear. I mean, I know there's certain sectors that are a little different. You generally still want to keep your exposure light, but certainly in the growth area, there's just, you really want to see it get out of this range.
Yeah, because we've talked about the potential resistance areas to the upside, and also on the downside, Ed, whether it's the S&P 500 or NASDAQ, on the downside, we can also talk about that briefly here as well. If we get a close below the follow-through day, that would be a negative sign.
Yeah, and that follow-through day, the low of the follow-through day is a little bit below the 200-day line back at the time. There's a little bit more distance now, but if we have another day like today, I mean, it really wouldn't. I mean, I don't know exactly where we're going to go through the 200-day line if we had a day like today again, and get pretty close to those lows. And if you get below the low of the follow-through day, the chances of the rally failing are very high. And so the rally would still be on until we got all the way down to the lows, and it would have to undercut on the S&P and the NASDAQ because it followed through on both. But it would not be a good sign. And we'll have to see. I mean, obviously the market's very volatile. Yesterday we had a subsequent follow-through day. It's like, hooray! It's like there's a lot of positives, but so maybe this will just be another blip. but it's something to be aware of. Everybody's looking up to the highs, but we could go back to the lows very quickly.
Yeah, I think that's what's great about what we do is we do scenario analysis for best case, worst case. Look at all those different technical levels, whether you want to be bullish, whether you're kind of feeling bearish. Just relying on the charts can help you take away some of that emotion, some of that little bias, and prepare you for the various scenarios that can happen. And I think that's great because it helps us remain flexible.
Yeah, then that's just really so key in this market, and really certainly for the last, seems like for the last couple of years.
Oh, yeah. All right. Let's take a quick look at the Dow and the Russell 2000. So the Dow did get above its 50-day line in Wednesday's session, now back below it, still above the 200-day line. Small caps, which we did see a follow through day on the Russell 2000 in Wednesday's session. Pretty big downside reversal. You mentioned the Russell being up positive for a good amount of the day, but finishing quite a bit lower here. And then, of course, we got to take a look at the 10-year Treasury yield continuing to surge higher, Ed. And this is really driving the conversation and sentiment and the chart action that we're seeing underneath the surface.
Yeah, and this is actually mild compared to the 2-year yield. I mean, the 10-year yield is now at a 30-month high, but just to show, like at the beginning of the year, the January 4th or so, that first spike, well, the 2-year yield rose today 26 basis points, so like 1.61. So we're actually above where the 10-year was at the end of last year. I mean, it is racing to catch up. So that's going to sign. Obviously, from a long-term perspective, I mean, that we're well below highs. I mean, historically way down there. We're going to see a lot of rate hikes. It's just really going to be difficult to not see the yield continue to rise. Anything can happen, but the Fed probably has no choice. It probably feels it has no choice because the inflation reading was so hot once again. As long as that's continuing to remain very hot, they're not going to be protective of the market, quite frankly. They're thinking we have to deal with inflation. It's not a matter of choice. So, this is what's going to drive the conversation, yeah, as you say, for weeks and months to come.
Yeah, and that's why we've seen growth stocks struggling. All right. Well, let's take a look at one growth stock that didn't struggle today, but it's been looking a little lackluster lately. At least it did in Q4, but maybe coming back to life. We have Datadog here, DDOG, up over 12% on earnings and some pretty heavy volume, Ed. So this is great to see, but we don't know if this is going to be able to sustain itself to the upside. This could be a one-day event. We don't know.
It could be, and definitely in bad markets or choppy markets, you sometimes see that. When you see it, even stocks like Google, where it's like, oh, it's great earnings,
Right.
and then it slumps away. So, that was strong. Datadog. So we'll see. I mean, ideally, this would form a handle here. That today's high was basically at the highs of, December. It basically got there. So, and the relative strength line, it may have backed off just a little bit. For a while there, it was at a high. I mean, it was at a new high. So now that the market's, it's going, if nothing else, it's going to have a base. Presumably, it's going to start showing up on MarketSmith, I think, pretty clearly. Yeah, there's those trend lines. You could do those things. There's a 50-day line, but it just feels very aggressive.
Should you buy
I think you definitely
like
want to
this?
wait, especially now. Especially now, if you would be like, "Oh, I'm buying ahead of earnings," well, it worked. It worked for you. Okay, I mean that's it didn't have to work for you, but it did for now. But I think at this point, yeah, wait for a handle, wait for a pause, that kind of thing, and then see if you can move from there. Because see if it's more than just a one-day wonder. This wasn't one of the stocks to look at, but maybe look at a firm just to show you how bad things were. They were supposed to report after the close today. That was pretty big intraday swing from where it was intraday to where it ended up. So, I mean, that's a dramatic example, but a lot of stocks that are rising up, and obviously this was falling a lot more than Datadog did, but
Right.
This one held up a lot better than most of those high flyers, but it's something that you should be very cautious about. I mean, this is interesting. I like it. This was a great stock in 2020 and much of 2021, but definitely want to make sure that this sets up properly.
And if we do get that proper setup and it works, then what do you think that says about how the market is feeling about some of these higher valuation growth names?
I
Or
mean,
if it's a lone wolf, uh,
yeah, a
what do you
lone wolf
think?
would be scary, and that's because it looked like that's sort of what it was in late December. Hey, it's setting up, it's setting up, it's holding up, and then it broke. It broke. Obviously, yields took off in January, and so it couldn't withstand it. So, can it withstand it now? I don't know. A 324 PE. Now that may not have adjusted yet, but even if you adjust it for earnings, I mean, it's like it's still going to be sky high. Yeah, I would say something, but yeah, if it's a lone wolf, there's always that risk, and all of a sudden it will crack once again. So hopefully, this is just the vanguard of growth leaders, but I think there's be a lot of reasons to be cautious still.
All right. Well, only time will tell. Speaking of wanting to see set up here like a handle, let's take a look at BX Blackstone in the financial sector because that's what we got here. A sharp run up to carve the right side of a double bottom base. But as we expected, we saw it pull in a little bit, and now it's retesting a buy zone. It looks like it had a little bit of volatility today, but we are seeing an early entry that it's still holding above at this time.
Yeah, you could do an early entry from yesterday, that it's still holding, or a trend line from the top of the base. It was sort of getting up to that. So you could sort of treat that handle as now the official buy point. And there was a lot of good things, as Justin was saying on IBD Live today. It found really strong support near the bottom. There was strong, heavy volume that day, but it closed essentially at highs, and then it had a lot of high volume days on the way up. But you're right, and then dried up, But so it's doing a lot of really nice things.
Mm-hmm.
I don't think this is particularly exposed to interest rates one way or the other. Obviously, the market pressure. I mean, the relative strength line is going to have a nice day today, going down 0.1% when the market did what it did. So definitely one to watch here.
Okay. And now let's take a look at a name out of the fertilizer group, and that is Nutrien NTR. We have that RS line blue dot on the weekly chart here. Ed, flipping on over to the daily, looks like it backed off quite a bit with the overall market weakness. We have earnings here in a little less than a week, but this chart, the technical strength is pretty evident at the moment.
It is, and it's still up several percentage points for the week, and it rebounded. I believe their CEO left, and that caused a real break and sort of odd, But then the market said, "Well, I guess it should be fine," but it was sort of weird. So that had an impact. So there's that kind of downslope, or just across the side, like there. So in some ways, it'd be nice if it could just sort of pause here and then have a nice move on earnings, because there would be a lot of risk in less than urgent earnings, because it's coming up next Wednesday. So it's not a lot of time to build a cushion, especially in this kind of market. But definitely, this is a strong group. The group is back up to number 10. We know a lot of the others are doing well in that sector. Commodities in general are among the leaders. They a little bit more inflation protected because there's demand. They can raise prices.
Mm-hmm. Yeah.
And I see your arrows pointing to something, a nice point there
Is
as
it
well.
pointing to something? Yeah, go ahead.
Well, I mean, you always know this stuff, but it's the PE ratio is relatively modest. And look, we don't, historically, we don't talk about PE ratios that much, but when the rates are rising like they are, the PE ratios matter. Obviously, the market cares about it,
Mm-hmm.
so you should care about it too. And these are relatively
Yeah.
low PE stocks.
Exactly. I mean, that's another way that we're being flexible and aware of, what the market is rewarding. There was a time when we were very focused on that really strong earnings growth, and we still are. That's something that's very important. But we started noticing the market putting more of a favor towards that revenue growth. Now we're seeing the PE, those low PE stocks getting rewarded. So a trend that we are definitely keeping a close eye on. Thank you, Ed, so much for all your insights today, and for everyone for tuning in. We'll be back with more tomorrow morning on IBD Live, where we will be joined by Charles Harris. We've got a lot of questions for him, and I'm sure you all out there do as well. It'll be great to get his take on what we're seeing in the market. So make sure you tune in, investors.com/ IBD Live. And Friday Fun Day, why not get your double dose of IBD? Justin and I are going to be on Barron's Live at noon Eastern, talking all about strategies for getting back into the market after a correction in a measured approach, which, with all the crazy volatility that we're seeing, seems like a good topic to discuss. So you can check that out. Sign up for free at barons.com/live. Thanks, everyone, and we'll see you back here tomorrow.